Good evening, all. Ira Epstein with your Spider ETF subscriber video, and this video is for Wednesday, the 22nd of June, 2022. Interesting markets. They're like marking time now, going pretty much sideways across the board. I saw that today in the financial markets, in the futures and the metals, and there's more and more of that. The one thing that I am saying is I am not part of the camp that thinks inflation is roaring any longer. I think we've seen a peak. I look at the futures market as my guide. Gasoline prices down about 60 cents from their highs. Crude oil certainly down some $10, $12 a barrel from its high. Grain prices sharply lower over the past 2 weeks. Ukraine grain probably going to make it out of the country in the next, say, 90 to 180 days in some manner if Russia doesn't bomb the railways and the roads, which they're going after. You heard me, going after. Today they hit 2 terminals for grain run by Bunge and one of the others, I think it was Gold Course, one of theirs. And to make a long story short, the market's not even bouncing on that news, and that's grain that's just not going to make it to the marketplace. Obviously, it's destroyed now in those particular terminals. We're getting the bounce that I was looking for in the bonds and the notes. You would, in the futures, lost the bearish embedded reading. It normally causes a rally to the 18-day average. So before we begin, if you're watching me on YouTube, do yourself a favor, hit the subscribe button. When I put these out, as soon as they're ready, it comes right to you. You get your notice. That's number one, and you're on our list for everything else. I look at Chewy. I like the action. It looks good. You know why I like Chewy? Because I use it for all my pets. We love animals here. My wife's a nut with animals. And we're forever got something coming from Chewy one way or the other. Looking good. Trend is certainly up, higher lows, higher highs. The market is over the 18-day average. It cleared the 50-day, the 100, and the 200s above it. But it's working its way up in a market that after a huge decline, remember, this came from all the way back up there, and it fell dramatically in price, more I think it was more than 50% overall. And it's finally getting its legs under it. It's not ready to just run to the upside. This is a market that has now transitioned away from being bearish, and it takes a while for it to develop the real bullish scenario. Why do I say that? Because the odds of staying over this Bollinger Band, these black lines right here or under them, 5% of the time. I want to be the casino. I want the odds on my side. I'll let you win a few times there, but I'll get you 95% if you're buying over that, because you can buy it better, just like you did there, if you still want to buy it. That's the theory of this. Momentum, overbought. So I have a market that's now overbought, used a lot of power to get to the upper Bollinger Band. At a resistance point, I think there's some exhaustion coming into the market now. AMC, if this is the summer rally, I'm looking for this to be down here. You heard me. If this is all this market can do with all these movies that are coming out and you can't lift AMC out of this, that's a problem. It's easier to break out to the downside than the up because you got moving averages here. Obviously, a 25.05 would be a dream for this company if you can get up there. The trend is up. The bias is up. The market's trying its darn best, and it just can't seem to lift. You don't want to be short, but it's giving a real hard time to be long. I think the pros bought it at 12.72. I think they're wrong in the market at 11.42. And I think they're praying they can get up to 14.27. In Apple, you're no longer in the bear camp, but you're not in the bull camp. You hit the lower Bollinger Band, you bounced around it for about 3 days, and you lifted up over this prior high. That's not a bull picture. It's not a bearish one either. You have a big nothing in this chart. The bias is down, momentum is oversold, and you're not putting together a string of higher highs, higher lows, or anything like that. Disney's in the toilet here. I mean, how low is low? You would think with all the bookings, and I'm sure that their parks are full. Why isn't this going? Is it something on streaming video? Could be. What a recession's going to do, and we're in one. You're going to start cutting back on things. I'm already looking, saying, do I need Hulu, Prime TV, Netflix? I have everything. How many can I start cutting? And I'm about to do that. All right? There gets to be the point where you cut back. And you'll say, well, Ira, you can afford another $10 a month, whatever. You're right, I can't. But that's not what I should be doing. XLF, lower highs, lower lows. Now it's embedding. So this tells me that the pros want to sell the financial services. Sell it, not buy it. Be careful here. A warning sign would be if the red line closes back over 21, that you're going to make a run back to this number. Barring that, I think that the market is now setting up the embedded reading. What do I mean by the embedded reading? Let's see if I can do this without screwing anything up. Of course, I screwed it up right off the bat. I didn't want that to happen. That's what I want to happen. There we go. Let's count how many days do we have under a 20 level here. Not there. Day 1 was Friday. Day 2, Tuesday. We weren't open on Monday. Day 3, both numbers under 20 today. So that tells me that the pros are going to sell a rally in this market. They'll bail if you get a reading over 21, and they're going to look down here, in my opinion. 29.75 is a possibility. So you have an embedded reading that developed there. You're close to it in XLI, still bearish. You're getting more and more readings that are bearish, not bullish. Semiconductors, you're trying to embed right now. If they do, I think you'll go back to these lows. Home builders, oversold, not embedded yet. The market might try to do that, but we're not quite there. Let me just show you. Tuesday, both numbers under 20. Not so on Friday. So we only have 2 days where you're there. We have to wait and see if that is, in fact, going to set itself up. XLE, oversold, under the lower Bollinger Band. You'd never get me to do that. Do you remember when we were over here the other day? I said, watch out now that you're under this number. The combination for support was 76.87, down to 70, down to the lower band of 7,700. You punched under it, which means if you rally at all, and let's see if I can bring this back for you. If you rally here, you should have resistance at what was support. And that's exactly what's going on. So for the next week or so, I can see that bouncing like that, with that being your resistance point in the market. We'll see if it does anything. Gold. Today I was very aggressive telling my traders that I think that the pros are going to be selling right here. A stop over the 172.77. The risk on the trade, I don't know, was it 60 cents when I was telling traders to do it? Something like that. And if you break 169.10 is the downside target. We'll see if that comes in. I also told them that there's nothing to do in GDX, SIL, any of those any way through. And I'm real bothered by copper. They call copper Dr. Copper. It tells you the world demand for industrial goods because it's used in everything. Tonight, Chile is talking about some 50,000 workers going out on strike right away. Copper's not bouncing. That's a big supply of copper that can come off the market. You get bull news and markets don't pay attention to it. Learn to write that down on a piece of paper for yourself. If it doesn't respond in the morning, there's more to this than meets the eye and it's bearish. AGG, okay. You had an embedded reading that you lost. Markets often make a run to the 18-day average to regroup. That is underway, present tense right now. UUP. You've got the dollar with higher lows, but suddenly lower highs. We've gone into a pause in the dollar. It's not bearish, but it's not bullish. It's now, I give the bulls the nod, but not to add new money on those charts. I don't think they're doing it. And it's almost a flip-flop of that in the FXE. You got the lower highs, but higher lows. So the battleground is shaping up in a massive way in these markets right now. And I think you've got to learn to take advantage of some of that. And that's where I want to step in for you in the mornings. You know, at 9 in the morning, let me tell you what I do. I wait until 9 to make a recording. And you'll say, why 9? The market's open at 8:30 Chicago time. The reason is I let the stupid money get placed. What do I mean by that? The stupid money, I want to come back to where we're at right there, and you'll see what I'm saying. The stupid money is the algorithm money that overnight finds its way into the market. The fast traders, the guys that don't know what they're doing, they come in and they immediately, I got to be long, I got to be short. They give the market no chance to dissect that money. More important, they don't even understand that between 6 and 9 in the morning Chicago times when all the government reports come out, the vast majority of them. There are reports that can come out later, but the vast majority there. Next, you've got Mr. Powell, our Fed chair, speaking. He spoke today in front of the Senate committee. He'll be in front of the House tomorrow. It's a 2-day event. He's not saying anything new. The Fed's going to fight inflation. The Fed thinks that it can handle unemployment getting worse. In other words, maybe a half point back up to 4.1 in the unemployment rate. Unfortunately, history shows every half point increase is accompanied by a recession. People aren't paying attention. Learn to play bear markets. I cover some of this and a lot more. I cover 40 markets at 9 in the morning. It takes me about 15 minutes to record everything. Then I render. Then I give you the posting of it. Each weekend, we go to the weekly charts and we look for the bigger picture. Where can you get into something and hold it for a longer period of time? Then I'll do bonus videos from every now and then to try to give you ideas that I see in the market that can come out of left field. So how do you get this? It's simple. You go to our website. And in the website at iraepstein.com under research, everything is listed out for you there. That's all you have to do. The next thing you want to do is you can take your cursor right now, move it up if you're watching me on the internet. You'll see an icon appear. Give it a click. It'll take you right to the area where everything is explained. I'm Ira Epstein. I'll see you first thing in the morning. You have a good trading day.